Hey, it's Rick. It's Tuesday, August 15th. Time to look at the market. We've had a few days down. My charts look a little different. The setup is basically the same as I've always had it. On the left-hand side here, I have the weekly chart. On the right-hand chart is the daily, and we're looking at the S&P 500. This is a new charting plus fundamental analysis software program that I've come across. I've been watching these guys for a while. They just launched it a few months ago. They're still in sort of development phase, but what I've seen so far since I've played with this on the weekend to today, it's pretty phenomenal. But anyway, I'll get into a little bit of it, why I quite like it in a bit in this video. But here's the direction we've been going on the SPY, and I think I mentioned this in my video a couple of weeks ago. This isn't completely expected. The market generally is, historically, it's weak in August and September. We are getting somewhat oversold. People expect, and we actually got a bounce off the 50-day moving average yesterday. Closed right near the high, which gave a lot of promise for today. However, we gapped down and then just kept going south all day long today. So not a pretty picture. If you look at all of the indexes were down. The Qs were down 1.1%, SPY down 1.1%, small caps down 1.3%, and the mid caps down 1.4%. So pretty widespread. Just quickly have a look at the Qs. What's going on here? Yeah, okay, so the Q is pretty much the same story, except now we're living below the 50-day moving average. We've now had that closed above it yesterday, and then below it. So we're getting more closes below the 50-day, which is not a good sign. Small caps, we're still hanging on close to the 50, but today was the first close below. So again, it looks a little oversold to me. We could get a bounce. Kind of what I'm looking for. And with this new program, I really don't have good drawing tools. Or at least they have got great drawing tools. I just haven't figured out how to properly use them yet. But I think we could do something like this over the next couple of days. Oops. This is maybe going to be a waste of time. And then roll over and head back down this way. I think by the end of September, we're going to be in this zone down here, down near a rising 200-day moving average. Is a pretty good bet. So good time to keep your cash levels very high and wait this one out. I'm doing actually this. We've been down. There's a tool here. We're down from the peak up here to today. We're down small caps over 5%, and I think we got another 3, 4, 5% to go. But I'm having a pretty good run of it the last 2 weeks. My account balance total between all of them has not changed. It's gone up just a snick. So I'm pretty happy with that. So we just show you a little bit about this program and why I'm excited by it. A couple things onto here. So couple of this, I'm in 7 positions right now, so I'll just quickly go through these. First is Allison Transmission, and you can see the difference in the look of this chart versus the SPY and the Qs and the IWM. I think you'll see that with all of these charts, they look completely different. They're certainly relatively much stronger than the major averages. The beautiful thing about this particular package is I have built a panel right here that I can select from like 300 different matrix. And I don't know if you can see all of these, but basically at a glance, I can see what the market cap is. This particular company is 5 billion. How many shares outstanding? There's 89 million, which is a little on the high side for me. What sector they're in, what industry they're in, how is that industry group performing? Is it ranked in the last 12 months or 1 month period? So I like to focus on stocks that are in the top 25% of industry groups. So it'd be the top 40, top 50. This meets that criteria. Keeps track of the earnings dates, when they went public. And then I have a little bit of sales data. Their sales last year were 2.7 billion this year. The estimate for next year is like 3 billion. And then it has it in percentage terms. So again, I'm looking for companies that are growing sales. I like them to be growing more than 25%, but right now I'm not picky. Then I got some relative strength rankings in here, earnings rankings, and a few things like that that I can just see at a glance, which is extremely helpful when you see that next to the charts. And then down below here, this is on an annual basis what their earnings were for the last 8 years. I think they go back 1, 2, 3, 4, 5, 6, 7. Yes, 7 years, and then they go forward one. So you can see that the earnings growth, 262, 413, 553, 668, and then forecast for 692. So it's flat, and then their sales growth. And if I want to get a little deeper, I can just switch this to quarterly, and I can see it quarter by quarter. So anyway, I won't go into a long tutorial about that. But so this one, this arrow just indicates the day I bought this. So we're still pretty much where I bought it. Hasn't really moved up that much, but the pattern looks great. ANET, I just bought this yesterday. And it came out of this, it's a little aggressive considering the market conditions, but it's got in here yesterday, right above this high, and it followed through today. So I can get my stop up to break even here pretty quick. So keep myself protected in this one. Again, this is a bit bigger company. It's a $55 billion technology company. They have 300 million shares outstanding, but they're growing. Last year, sales grew 27%, and the next year they're forecast to grow by 48%. So I kind of like that. This one is in the, well, if I actually hover over the name here, that's why it's not doing it. It tells me a bit about the company. Well, here we are. What they do, they're a mechanical contracting service company, primarily air conditioning and heating and blah, blah, blah. It's kind of a boring industry, but when you got a chart that looks like this, I'll take boring any day of the week. So their market cap is 6 billion. There's only 35 million shares outstanding. They grew their sales last year by 35%. So it's projected to slow down a little bit next year, but kind of like this chart pattern. So I got in this a couple of days, yesterday actually, and it's following through nicely today. This is a truck OEM, original equipment. I bought this breakout here. It performed nicely. I sold a piece of it up in here. And this pullback is acting a little unnormal, not near as strong as I'd like to see it. The volume has tapered right off, so there's not a lot of selling going on. But the institutions yet haven't stepped back up and bought it. So I got to stop at break even on my last piece. So see how that goes. This is an oil field service company. I got in down here in mid-July-ish. Got this beautiful move here, sold it all, bought it back, can't remember what day, and got stopped out today. And then I bought it. I didn't buy it the entire position back, but I bought a fairly significant part of it back when clearly just ticked out these previous lows, took me and a few other weak holders out on their stops, and then it started to head back up again. So my stop is underneath the low of today's bar, so relatively low risk trade. This is the one I just entered today. Again, had a big gap up on earnings. They're growing too at about 15% a year. Their relative strength is like 99 out of 100. So technically it's performing exceptionally well. And it's another electronics company with a $15 billion market cap. So we'll see how that goes. And then the last one I have is WWE. Pardon me. I bought back here on the 8th of August, and it's performed quite nicely. I took some off up here at 14, getting 114 and change. Yeah, 114.72. And then I bought it back down here yesterday. So, and it's performing quite nicely. So I had now my stop has been raised into this 110 area right here. So this is going to be a profitable trade no matter what. So that's I'm pretty excited by this. This whole service is like $500 a year, a little less than it's $50 a month, but it's 500 for the whole year. But with this, I'm pretty certain I'm going to be able to cancel my eSignal subscription, and that's the screens that I generally show you each night or each time I do a video. That cost me about $2,000 a year. And then MarketSmith, where I get all my fundamental data, all of this stuff that you see here. And then there's tons more in behind the scenes here. I have this. Yeah, there we go. Tons more behind the scenes that I'll use when I'm doing my screening. And my MarketSmith subscription is about $1,500 US. So I'll be able to cancel that too. So I'll be able to save about $3,500 a year with this platform. So I'm pretty excited by that. Anyway, back to the SPY. I did get stopped out of this. Does not have Canadian yet. Anyway, it doesn't have any Canadian stocks. So I still have to find a way to sort of track the Canadian market. But I'm now 100% cash in my Canadian accounts. My position in the HXU got stopped out today. I guess the TXS was down, must have been down a fair bit today. Because I was decently profitable. I think I had a break-even stop, but it opened up, gapped below that, so I took my original stop. So lost $500. No big deal there. Okay, that's it for now. Expect the market's going to be somewhat crappy. We're going to get maybe a couple of days of bounces. But it's time to keep your powder dry and wait. And I think we're going to be sitting tight pretty much till the end of September. Okay, cheers, everyone. Oops.